Hey, what is going on, everyone? Vega here for SerpentX Tech. Welcome back for another episode of Caffeine Crypto, where I usually ask you to join me with your favorite caffeinated beverage of choice, coffee, energy drink, whatever it may be, or a glass of water as we go over this week's kind of crypto news, but also some tech news. And I've been up for a while, so I'm not even drinking coffee. So no Doge Lord coffee today, tea instead. Been drinking some water, staying hydrated because I'm going out to the game tonight. It is preseason, but I am hyped and ready for it. Thank you for everybody coming over from Crypto Macau, and good morning to you, good evening, good afternoon, good night, wherever you are in this world. I hope you had a great week. I know it's been kind of a bummer that we got Bart Simpson again, and the market is down. But, you know, this is just, in my personal opinion, not financial advice, just some more buying opportunities for everybody to stack up on their favorite currencies. We got XMR doing good, up about 5.5%. RLB up about 14%. And then the rest are slightly green. Not deep in the greens, but slightly green. We're kind of being held at that 26K range. And Bitcoin dominance is only at 47%. With some bearish news in the horizon, of course, we had this severe pullback. But we do got a marker saying that we should buy that flashed on the 21st of the beginning of this week. And then if you're kind of trading this range here, you could do pretty good. For example, the range is somewhere between 25.2 and 26.6. And if you're trading that range, you know, short and longs, over the short term, you should be good. But as far as the long-term view, I always tell people, you know, just zoom out because we are technically up. Matter of fact, let's go to CoinMarketCap real quick. If we zoom out on the year, we are technically up, right? So for the past day, you know, we're not up much, 0.88%. Past 7 days, only 0.36%. Past month, we're down 11%. Past year, though, we're up 23%. And obviously, for those of you that have been holding since Bitcoin was around 6 cents, you ain't worried about nothing. Because that thing is up over, I can't even pronounce that. Let's see here. Boom, boom. 42 million percent. Over 42 million percent if you held on since the 6 cent Bitcoin days. But not everybody were lucky to get in during those early stages. And CoinMarketCap doesn't even have all the absolute data. It might, but I don't think it does. So, yeah, bearish news from the political sphere. Biden administration unveils new crypto tax reporting rules, and it looks like we got these in the top 3 articles that's kind of been circulating right now. Sweeping U.S. tax proposal met with boos from the crypto world. IRS proposes new crypto tax rules. There was some arguments or not arguments, debates online, and some arguments and some drama on crypto Twitter, as it always is, especially when people are broke. It just tends to happen. When people are broke, they tend to fight more. But only thing I can say is keep your head down and keep grinding. But let's go over this news. So cryptocurrency brokers, including exchanges and payment processors, would have to report new information on users' sales and exchanges of digital assets to the IRS under the proposed U.S. Treasury Department rule published on Friday. The rule is part of a broader push by Congress and regulatory authorities to crack down on crypto users who may be failing to pay their taxes. A proposed new tax reporting form called the 1099-DA. We already dealt with the 1099 or 1099-D, but this is called the 1099-DA. Is meant to help taxpayers determine if they owe taxes and would help crypto users avoid having to make complicated calculations to determine their gains to the Treasury Department. Now, if you're familiar with the channel, I've covered a number of different tax tools, tax reporting tools, or trackers to help you out. Cointracking.info is one that's linked down in the description. I know Max Voltage was a big proponent of Coinly, and then TurboTax, as I mentioned in previous videos, has been progressively getting better as far as integrating with crypto exchanges or MetaMask or wallets or whatever it might be, so that way it can grab all your transactions, bring it in, and then you just got to go through, and sometimes it can automatically do it depending on the exchange, or maybe if they have integration with it, and then sometimes you have to manually do it, you know, advise, hey, this is a mining transaction, or this was a gift, or I got this airdropped, or whatever. You got to signify which one it is, and then kind of go from there. So there's all kinds of different tax tools out there. You should be reporting your taxes and not trying to hide your crypto gains, because they will eventually find out and then come after you, whether you're in the US or a different country. I know every country has its own rules. Just try to do your best to abide by whatever the rule of law is there, or whatever the tax atmosphere is for your country, whatever it might be. Under the proposal, though, the definition of broker would include both centralized and decentralized digital asset trading platforms, right? So DeFi get in the mix here. Crypto payment processors and certain online wallets where users store digital assets. The rule would cover cryptocurrencies like Bitcoin and Ethereum, as well as non-fungible tokens or NFTs. Brokers would need to send these forms to both the IRS and digital asset holders to assist with their tax preparation. So my question is, you got to be careful with that broker term, but it's kind of a broad statement. So is MetaMask needing to report on us? Like, are they having to send a form to the IRS on our behalf? Because I don't think they can identify which wallet owns what, right? Or who that wallet belongs to. Crypto exchanges, like centralized exchanges, cool. You know, Coinbase, Cash App, Binance, understandable. But some of the other, you know, not less used, but less predominant, like Coinly, Coinami, excuse me, Coinly, the other Coinly, not the K. You know, I don't think they have a way of determining, hey, this belongs to Chris Vega. All right, I don't think there's a way to do that, but we'll see. The new requirements stem from the $1 trillion 2021 Infrastructure Investment and Jobs Act, which include a provision to aim to increase tax reporting requirements for digital asset brokers. It instructed the IRS to define what firms qualified as crypto brokers and provide forms and instructions for reporting. All right, so as long as they work with the entities to try to give them guidance and not just slap them with fines like the SEC, then it should be good. It also extended reporting requirements to certain cash transactions for more than 10,000 in digital assets. So if you're trading a lot and you made over 10,000 in sales or buys or whatever, then you obviously need to report it. I remember it was 20,000 or 25,000 before. Now it's becoming lower and lower as more and more people get in, which is quite unfortunate, but we'll see. We'll see how it pans out. As long as there's clear guidance, education, and proper regulation of the industry, I do believe that the industry will grow healthy. It needs to happen because there's a lot of money on the sidelines that want to get in but don't want to get in until that guidance and that clarity is set, the tone is set. This is part, and there's a quote here from the Treasury, that this is part of a broader effort at the Treasury to close the tax gap, address the tax evasion risks, oh my goodness, poised by digital assets, and help ensure that everyone plays the same set of rules. So what's funny is if anything, tax evasion is going to be happening at the higher end tier, the people that have a lot of money, right? You know, because they're living in Puerto Rico, or, you know, content creators leaving the U.S. or whatever, to more tax havens or tax friendly countries. So if anything, that tax evasion is happening on that end, not so much the average end user, right? The blue collar worker that's trying to just, you know, dollar cost average into the industry and build financial wealth for the future. But yet those individuals, you and I, the blue collars, the people in the front lines, people working their you know, their ASSES off to try to make ends meet, you know, paycheck to paycheck or whatever, are probably going to be hit most heavily by this, right? So our profit gains won't be as much as we would like, because we're not able to accrue. We don't have that you know, big blanket of wealth that we can just throw around, whether it's buying into assets or to you know, try to buy my way through the game, right? Pay to play, it's free to play, but it's pay to win, I guess you could say. The crypto industry had mixed reactions to the proposal. Blockchain Association CEO Kristen Smith said in a statement that if done correctly, the new rules could help provide everyday crypto users with the necessary information to accurately comply with the tax laws. It will. It will. I just don't want people to assume that just because we're in crypto that we're using it for tax evasion or for nefarious purposes or malicious intent. That's not the case. We got another quote here that says today's proposal from the IRS is confusing, self-refuting, and misguided. It attempts to apply regulatory frameworks predicated in the existence of intermediaries where they don't exist. which was done by Miller Whitehouse, I believe, CEO of DeFi Education Fund. And of course, the DeFi space is going to be a little bit perturbed by this, but we'll see. Larry Chen liked the message I said. Good episodes coming out from Haggerty and Larry Chen if you guys are into automobiles or car culture. So we got also several Democratic senators, including Elizabeth Warren, argued the Treasury in a letter sent earlier this month to quickly implement these rules, arguing that otherwise tax evaders and crypto intermediaries will continue to game the system. Obviously, there are people out there gaming the system. Let's just be real. But we'll see how this pans out. We'll see how this pans out. Let's see if this article tells us anything different. We all know about the proposal. However, I want to know what your thoughts are in the live chat. I don't see much going on. I appreciate you coming and hang out. As I usually do during my live streams, I just blow through the news. But if you want to get my attention, you can either send a super chat or just at me in the live chat comments. For all my future viewers, that's why I do it, is try to get the data out, try to get the information, the news out to you, get your recap, and then you move about your day, because not everybody can join us in the live stream due to the timing. So I appreciate your support nonetheless, and thank you for stopping by. But here's another article talking about the proposed rules. I'm trying to look for anything else new on here. I mean, the same Miller Whitehouse Levy, the CEO of Decentralized Finance Lobbying Group, just says that the proposal as written is overbroad, right? It is very broad, with provisions allowing it to capture all sorts of entities. He pointed to the self-hosted or unhosted wallets as one example, while acknowledging that the self-hosted wallet users effectuate their own transfers. The proposal still somehow attempts to find third parties responsible for effectuating transfers on behalf of the wallet user, he said. In order to square the circle, the proposal asks one to accept the effectuating doesn't mean effectuating. So I'm going to need some legal experts to kind of decipher what the hell that means. But we also have another poster here on the platform noted that wallet providers like MetaMask, decentralized exchanges like Uniswap, and any smart contract with a multi-sig security setup might be captured under the reporting requirements. So they need to report on XYZ wallets, right? Because they did over 10,000 in transactions. But how did they identify that wallet belongs to this person? Now, some people do have it set up to where their wallets are their name, right? A Ben.E for, whoever their name is. So you can identify through chain analysis what wallet belongs to what. But would MetaMask or these DeFi-centric wallets be able to do that for everyone? No, there's no way. Wallets are created like that, and they're used for minute transactions, or maybe because they're using a MEV tool or bot trading or whatever. So they're created, and some of them are just one and done. They're created for that one instance, and then they're never used again. So it's hard to track what that wallet belongs to, even if they were trading over the $10,000 mark. But we got Congressman Patrick McHenry saying, who's the chair of the House Financial Service Committee, said that while he was glad to see the effective date and certain exemptions were included, the proposed rulemaking fails on numerous other accounts. So even their own congressman, whether it's Republican or Democrat, doesn't matter. This is unilateral. People across the board agree that it's too broad. It's too broad. They need to kind of hone it. They need to kind of refine it before really pushing it through. But we'll see how that goes. We got another quote here. Following the passage of Infrastructure Investment and Jobs Act, numerous lawmakers of both parties made clear that any proposed rule must be narrow, tailored, and clear. However, it fails on numerous counts. Any additional rulemakings related to other sections from this law must adhere to congressional intent. The crypto ecosystem is very different from that of the traditional assets, so the rules must be tailored accordingly and not compare ecosystem participants that don't have a pathway to compliance, said Kristen Smith, CEO of Blockchain Association. But Smith also nodded to the other side of the coin, that the future rules will potentially give masses of crypto investors a clear path for filing their taxes, eliminating what's been a major roadblock for easy involvement in digital assets, which again is true. Once we have that clear guidance, once we have that clear regulation, once people feel more secure, because they don't want to be the custodian of their own wallets. No matter how much we train them, no matter how much we share with them, no matter how much we try to educate them, they don't want to be the custodian of their own wallets. They just want an easy life, right? They just want to buy an asset, store it somewhere centralized that they can easily access on their phone or computer and keep their lives going. That's it, right? And even if that centralized exchange or centralized entity fails, they want the federal government to step in and make sure they get their money back. FDIC insured, all that good stuff. So once all that clear guidance comes in, you have this influx of mom and pops, and even though my mom's in Bitcoin and in crypto, because I taught her, not every mom and pop, not every grandpa, grandma, uncle, auntie are in it. It's mostly the younger generation, or I would say the 40 and below generation that are into crypto or have the most exposure in crypto. We do have some outliers of the older generation just because they've been in a tech space for such a hot minute. But once we have that influx, and right, we still got all that money in the Middle East staying on the sidelines, right? We still got significant investment from the Asia markets on the sidelines. So just imagine if this clear guidance, if the world can agree on terms, if the world can align in the proper regulation of crypto, then this thing is going to be a huge undertaking. I mean, Bitcoin is already outperforming traditional assets by a whole lot. So again, I can't emphasize enough being involved in your local area, whether it's, your town, your county, your city, just even if you're not a politician, even if you're not an economist, even if you're not a regular, just being involved in the conversation. So that way when words or statements get said that are incorrect, you can be like, no, this is what it is. Here's the facts. Here's the data. Right? Just being involved and helping kind of steer the ship is what we all need to do as individuals in this space. And there's only a handful of people that I know that are doing that, but I would like to get more people involved. I would like to work directly hand in hand with the state of Florida, along with a number of people that are already working with the state of Florida. But we also need to, obviously, it's not just state, it's not just town, it's not just city, right? Miami is a Bitcoin city. Let's just be real about that. They are, and now you have the mayor trying to run as a presidential candidate. Now, again, just because this presidential candidate or candidates are saying they accept Bitcoin does not mean that they earned your vote just because they're pro-crypto. Make sure you go and evaluate their other policies or their other goals for the country before you go voting. Just because they're pro-crypto doesn't mean they align with all the various aspects that you want to see out of your leader for this country. But I do believe that the 2024 election and the Bitcoin having, as Max Voltage corrects me, once those two things happen, I would give it about a year, maybe a year and some change, and that's when we're going to start making new all-time highs. So just hang in there, keep your head down, dollar cost average, not financial advice. Focus on the assets you want to accumulate, whether it's through mining, right? And all you're doing is spending electricity, even though it's negative and unprofitable. You're stacking a bag of XYZ crypto because you believe in the long term, right? Or dollar cost averaging because you don't have any mining equipment, you sold it all, you just want to get a bag of XYZ crypto, go for it. Because in the long term, I believe blockchain for sure is here to stay. Crypto, maybe not all of them, is here to stay. And as we get better regulation, as we get leaders with more open-mindedness and objective takes on life, instead of this old-fashioned view on life and how it should be in the financial system and everything else, we'll start to see an uptick in the overall market. So this article from Exos, just going to hit a few key points talking about the same subject, but says why it matters. The regulation would implement a 2021 law and were estimated to generate some 30 billion over a decade, right? So they want to make sure it's taxed because this is money that they can use, the U.S. can use for the infrastructure bill. And I understand that. We do need to improve our infrastructure. I'm all for it. Just as long as the guidance and clarity is being presented and end users, right? Like mom comes up to me and is like, how do I file this on my taxes? We need that clear guidance so that we can file it properly. Yes, you can go to tax professional, but we need to get this information out to the mom and pops, the individuals. Driving the news. Under the proposal, crypto exchanges like Coinbase and Kraken would require to send annual reports to their customers and the IRS in similar fashion to brokers who manage customer stock investments. The big picture. It's been relatively easy for American investors to circumvent paying capital gains owed to the government, in part because digital asset transactions are more complicated for agencies to track. Their novelty also puts them in a reporting gray zone. Details. Some crypto transactions aren't directly tied to a name. If an exchange does not provide reports on them, it's harder for the IRS to know what folks owe. And some studies show that tax compliance is higher when the IRS has independent info about people's income. Decentralized finance, revenues, and NFT marketplaces would have to submit those rules. Coinbase proposed a solution for DeFi tax reporting earlier this week. Excuse me. What's next? The U.S. Treasury will take public input and feedback and propose regulations. So again, be vocal, be active. And then when fully implemented, crypto exchanges would send reports starting in 2026 for 2025 tax year. So we got some time before this happens. It's probably going to be the bull run that, all those reports come in. Here's Coinbase proposed fix for DeFi tax reporting. Let's see here. Decentralized finance, subset of crypto industry. We already know what it is. Once the software is released, it doesn't need humans to run. Okay. Yep. Smart contracts. Until DeFi. Yep. We got that. The intrigue. It's not like information in DeFi is hidden. In fact, it's much more open than normal finance. It can all be read on the blockchain. It's just understand the blockchain, right? Chain analysis is, I would say, something that I could do, but not everybody could do. So how would we automate that process? How would we automate chain analysis? And I know this will make life a lot easier. I know AI has already been involved in some chain analysis reporting, or just network metrics in general. So I could see that easily being done. A crucial piece of information is missing from the sea of data. Which trades are done by whom, how to identify, or how to put that trade with that person, identify this is their wallet. Coinbase proposes that a token be created that could tie a user's real-world identity to the different blockchain addresses he or she or the company is using. The identity would not go on chain. It would just be something that could prove using some off-chain system, the wallet belonging to a certain someone. The same off-chain tool could help to generate reports for user activity, reports that should be easily verifiable by checking the transactions against whatever blockchain it took place on. Of note, it's unlikely that this would be a token for trading. In fact, we could imagine it being as soulbound, that is, a token that can't leave a wallet after going there. Okay. So this is something that I propose, or that I've just been brainstorming. I'm not sure if it's going to happen. And before we move on to JP Morgan, or what JP Morgan thinks about Bitcoin and how we are at the bottom of the Bitcoin bear market, is that voting in the United States hasn't exactly been the best. Confidence in the voting system has wavered. So what if we were to somehow create identifiers on blockchain, or on a blockchain, or maybe a new blockchain or integrated blockchain, whatever it might be, layer 1, layer 2, whatever it might be, and that identifier is uniquely tied to you, kind of like a social security card, kind of like your fingerprint. And that would be your identifier for, and then this is where KYC comes in, and obviously people are going to be upset because of privacy and stuff like that. But if you have this identifier, right, that's stored on the blockchain, and your wallets could be tied to it, so that way this unique identifier only, and see, that's the hard part. Who gets access to this data? You want the government to have it, but the government can be hacked. The government can be penetrated. So how do we, same thing with the voting system. I know that ID, right, that unique identifier, kind of like on Ravencoin, right, the assets, that unique identifier is tied to X wallet, and we can use that to prove, I am who I am, Chris Vega, voting on this day for this elector. But how would you apply that to everything else? I think it can be done. It's just who is going to have access to this, right? If you want just the government to have access to it, and you're willing to share with them, hey, these are my wallets, throughout various platforms, I'm good to go, and you're happy with that, great. And if you don't want to do that, my recommendation, or my thought pattern would be, don't use those wallets that you reported or identified yourself under. Create new wallets. Very easy to create new wallets. Maybe focus on privacy-centric ecosystems. and then transact in that arena, right? So now you got your wallets that are publicly and willingly provided to the governments or your countries, but then you have a set of wallets that are more privacy focused and that you don't provide. So we'll see how that pans out. Very interested to see what's going on. What's up, Tech Man? Thank you so much for stopping by. Retro Mike, Golden Wolf, Chris Hanley, Automatic Beats, Fudweiser, Wasted Trash Panda, Seb, how you doing? Crypto Mikkel, hope you're having a great day wherever you are in this world. Son of Rabbit Panda, Neomorphous, and Magic Lucky. So JP Morgan thinks that the Bitcoin market bottom is near. Now, this is very interesting coming from a centralized bank. But yesterday, JP Morgan analysts shared optimistic views regarding the near-term trajectory of crypto markets. According to their recent analysis, Bitcoin futures data suggests that the limited downslide for crypto markets is in the near term. Excuse me 1 second. Last week, the market took a hit as Elon SpaceX sold some Bitcoin holdings and China real estate giant declared bankruptcy. We talked about that, the Evergrande, which triggered the drop in where we are, but it was a number of key factors that were in it. However, the broader narrative for Bitcoin remains optimistic. For many investors earlier this year, Bitcoin got a wave of enthusiasm after financial titan BlackRock applied for a Bitcoin spot ETF. Pantera, a $3.5 billion crypto fund, wrote this week, if history were to repeat itself, the next halving would see Bitcoin rise to 35K before the halving and then 148K after. I could definitely see 150K Bitcoin. I could definitely see that. Not guaranteeing it, but Bitcoin's new all-time high could definitely be 150K. Now, will it continue to climb after that? Who's to say? But that's definitely very, very interesting. But yeah, centralized bank, JP Morgan, saying that the bottom is near. The bottom is near. Now, personally, and this is not financial advice. Oh, God dang it. Sorry, God. By the way, this blue line has been a legacy line that I've been using for a while. And we bounced off of it perfectly. I should have been trading this. I should have shorted up here, right? Because I called this dip. I called it about to happen. If you go on my Twitter, you would see the post. It happened, and I should have shorted and then put my longs in around that 25.5 or 25.3 range. That would have been a good move. But I do believe that we are going to possibly fall a little bit more. The lowest we could fall right now is 21K, 21.4, 21.5K. In my opinion. I mean, we definitely could fall further than that, right? We got different levels, even this legacy line down here. Doubtful because we got a lot of support right here at this 25.2K mark. But if we did fall, 21K is possible. And I know some people have been calling for 20K Bitcoin for a while now. That hasn't happened. But if something dramatic were to happen, another major bank failure, another, climactic shift in the ecosystem or the economy, could drop this. And then we're down to 21K. And remember, this is going to happen again before the Bitcoin halving. So the Bitcoin will fall again before the halving. So I'm expecting a pump up, not making to new all-time highs just yet. But maybe we might jump up to 40K, maybe 35K, like the article said, which I do agree with, and then fall back down before the halving, or halving. Jeez, I can't stop myself, Max. And then after the halving, we start to slowly move up and sideways. A year down the road, we start to create that new trend, that new embarkment on the all-time high. Crypto builders should give up serving U.S. customers for 5 to 10 years, says DYDX founder. They argue that the early stage crypto projects could scale faster by not serving U.S. customers as they don't have to deal with the hassles of the U.S. regulatory climate. And I kind of agree with them. The regulatory climate in the U.S. is kind of crap, man. It really is. So Antonio, which is the founder of the DYDX, thinks that crypto builders should forget about serving customers in the United States over the next 5 to 10 years. Instead, he said builders should experiment in other markets and return once the time is right. And China's kind of been welcoming projects with open arms, which is kind of disappointing, right? Because I personally want U.S. to be a safe haven. It's a safe haven for mining, right? Like we got a large percentage of the Bitcoin mine is being mined in the United States. Where it goes after that is up for grabs, as various countries and centralized agencies, kind of jostle for as much Bitcoin in their portfolio as they can. But I was kind of hoping to be a much safer place, and it's not as safe. It might be safe for mining right now, but with all this talk about, the ESG conversation, which has been shifting, by the way, if you follow me, I got a nice meeting for you coming up September 30th with some of your favorite OG crypto content creators, crypto mining content creators. So stay tuned for that. I haven't announced who they are, but I look forward to having them on and speaking with them so we could talk about how mining has changed over the past year since the Ethereum merge. But a lot of people would come at us with this argument of, Bitcoin mining is hurting the environment. And yeah, okay, we're using more electricity, causing the power plants to burn more coal, but each power plant in each country, in each city, in each area has different types of mixes. So they're not just burning coal all day. They might be using 20%, 30% solar, and they might be used 20% or 30% hydro or wind, and then 40-50% fossil fuels or whatever it might be. But this is where the infrastructure bill comes in, because we need to improve our infrastructure overall. Like our electrical grid needs to be like super beefed up, not just for because the increased electric usage that data centers, which large farms are considered these days, but just for redundancy, right? We got only 3 main lines. Somebody takes out one of those lines, we could have the entire East Coast out, or the Central, besides Texas, because they run on their old power, and the West Coast. But a lot of the Bitcoin mining operations are on renewables, not 100% renewables, but most of them, some of them. One guy that I'm following, I think it's 100 acres. They're all straight up all solar. They're running their farm set up on all solar. So the mining people are doing what they can to proactively, help the environment, but still mine Bitcoin, still secure the network, still respond accordingly. So that argument kind of falls on deaf ears for me. But the topic of Bitcoin being harmful for the environment is starting to shift. We got major reports coming out where we could see that change in mindset. Like, hey, you know what? Most of these farms are, and ESG, I think, stands for environmental, societal, and governance. And they're getting a good rating, or Bitcoin is getting a good rating, or a good standing, I guess you could say. So, but the U.S. overall, going back to this topic, has kind of been like scaring people away, man. Like, you try to bring a girlfriend home and your mom's scaring her away, or you try to bring your boyfriend home and your dad's scaring him away. Like, yo, chill, dad, chill, mom. Like, I really like this person. Like, don't show him the gun rack, even though that's exactly what I would do. But anyways, yeah, I kind of agree with the sentiment. However, I do believe that those who build in the United States during this chaotic regulation time in the U.S. Will be here to stay. And that's usually what you do, is you want to build during the bear market, right? Because if you can survive the bear market and your project, the fundamentals are strong and sound, you can be a bit more certain, not 100% certain, but a bit more certain that you will be around in the future. Because really, this is just shakeout, right? The weak hands get out, the products that don't do anything fall apart, and so on and so forth. But we'll see how things go in the future. I just think the U.S. can kind of pull back on the reins a little bit, just relax, chill out, or let the reins go. Not pull back. Pull back means I'm sorry. I haven't rode a horse ever in my life, but loosen up the reins, let the crypto sphere do its thing, and then adjust accordingly from there. Make sure that you're not choking out the environment too much. But MasterCard also ends Binance card partnership and latest blow to crypto giant. Binance is on shaky ground. We had a number of ever since the FTX debacle, a number of employees that have quit or moved on or found new jobs. they're being hit and being really beat up by the SEC, CFTC. There's suits. There's all kinds of stuff. And now MasterCard is dropping them. Not going to talk about this article. I just want to mention that real quick. But MasterCard no longer offers Binance-branded cards in Latin America and the Middle East, which let users use. Okay, they got a typo there. So basically, customers were able to use their crypto to purchase goods in those countries with their card. Visa ended a similar card tied up with Binance in Europe in July, and then crypto continues to face a broadly tepid response from the financial services industry. And we know MasterCard and Visa, a number of others, PayPal, are building into crypto. They're building in. They're coming in. All right, there's no doubt about that. How they're going to come in, what they're going to do is just stretch it real quick. We'll see what the product comes out with, and what those financial giants wind up doing. But honestly, like, I used my Coinbase this morning at the gas station. My Coinbase card. I'm using my crypto to pay for my gas or what have you. Note to self though, if you got the Coinbase card and you're using it, if you can't put in your PIN, it's going to get declined, right? So if you're buying online, like I use it for Amazon, but when I buy like from stores like Shopify type stores, it doesn't want to use the card for some reason, even though there's funds there. But everywhere else, like at the gas station, where you got to put your PIN in and stuff like that, that's like kind of like signifying it's a debit card instead of a credit card. It worked just fine. Not sure what it is about those Shopify stores online. But yeah, another article here: MasterCard, Binance to end card partnership. Crypto Biz, Coinbase, Circle realignment as Binance fiat hurdles, faces hurdles, and USDC on Shopify. It's continuing to grow. USDC Circle has actually been popping or growing, which is very interesting to me because I know they're a competitor to BUSD and Tether, right? But Tether's been on shaky ground, and a lot of politicians and regulators don't like USD Tether, USD Tether. But USDC could, and I think if the government plays it smart, could make USDC kind of their currency, like the United States could. But we'll see. In recent developments, Coinbase and Circle decided to dissolve the Central Consortium in a strategic realignment driven by the demand for regulatory clarity on stablecoins, possibly in anticipation of upcoming legislation from the U.S. Congress. A legal alternative to remaining operational was also sought by Binance US this week. The exchange announced a partnership with MoonPay, featuring the dollar-pegged stablecoin Tether as its new base asset for transactions, allowing the powerful users to transact in the U.S. dollars while possibly sidestepping potential regulatory hurdles. In the meantime, Binance continues to facing challenges with on and off ramps. Almost 30 days before PaySafe ends its support for the fiat transactions in Europe, its users in the region are reporting difficulties with fiat withdrawals, so they can't get their money out. Good luck to you guys out there. But yeah, customers of the crypto exchange Binance are allegedly facing troubles with fiat withdrawals in Europe due to issues related to single euro payments area transfers. No idea what that is. Let me know if you're in the EU and what that is. The news comes a few months after Binance informed users that the Euro banking partner PaySafe Payment Solutions would discontinue support for the crypto exchange by September 25th. We also had one of our crypto exchanges, what was it? Not Tradio, TXBit, closing down as well. After this date, users will have to update banking information and may be required to accept new terms and conditions to continue using SEPA services, the exchange said. Meanwhile, in the United States, Binance US announced a new partnership with MoonPay to make the dollar-pegged token USDT the new base asset, yada, 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 which saw fiat deposits on the exchange disabled since June. So, yeah. All right, here we go. Coinbase and Circle have redefined a relationship. Due to growing regulatory concerns for stablecoins in the United States, the two organizations jointly launched the USDC stablecoin in 2018 and have since then governed the token through the Central Consortium. As the organization ends, Circle will have enhanced responsibilities, including holding smart contracts and regulatory compliance. While Coinbase will take the equity stake in Circle, interest venue will continue to be shared between them based on their stablecoin holdings. USDC is also set to launch into Polkadot, Optimism, Near, Arbitrum, and Cosmos networks to expand the chain reach. and that's good. And Shopify, USDC is expanding. I like the fact that they dissolved the consortium, and Shopify is now accepting USDC payment, and has added Solana Pay to its pool payment options, allowing millions of merchants to use the platform to accept crypto transactions. Kicking off with USDC stablecoin payments, Solana reported the plans to add other altcoins to the platform in the coming months, including the native token Solana, and the meme token Bonk. Shopify estimates 10% of all e-commerce transactions in the U.S., or 444 billion of the world e-commerce market, are made through its platform. The network average charge is about 0.00025 per transaction, while credit card fees range from 1.5 to 3.5 in the last epoch. Solana users paid an average transaction fee of whatever that is, 960 whatever. So very small compared to the 1.5 or 3% fee when using a credit card. This using crypto for e-commerce can save you a lot on fees. I mean, you're still going to get hit with the tax. Like, I have a tax here in my state. If I shop online, there's a tax I got to pay for my state. You're still going to have that. But any other, like, credit card transaction fees, stuff like that, could save a lot, especially if you're using the same card that's just using your crypto. I wonder how that's going to work. But I'm very excited to see as things move forward. China launches blockchain-powered data exchange, including Alibaba Cloud and Huawei participating in exchange debut. According to the local news report, the new Hangzhou data exchange will facilitate the trading of enterprise information data technology, or technology data, ensuring exchange trades are immutable and traceable, right? Because they want to see everything. They want to know everything, what hand you wipe your butt with and everything. So despite cracking down harshly on private blockchain enterprises for much of the year, China is a staunch supporter of government-controlled Web3 initiatives. So if the government can't have firm control over the crypto project, it's probably not going to do good in China or the Asia markets. Leak reveals Elon Musk, X, and Wall Street could be about to cause Bitcoin and crypto price chaos with PayPal update. This is just more FUD, in my personal opinion. But I would not be surprised if there's another drawdown. Okay, I would not be surprised. We could listen to the article, but just saying, more FUD, drawdown possible. Keep your head up. Keep your head up in a positive way. Keep your head down to stay out of trouble and drama and bullshit. And keep focused on what you need to do. Stop worrying about everybody else. Focus on what you need to. I see a lot of people online always got it's something extra to say. Always got to add a comment to something. Like, dude, this is none of your damn business. But then again, if you're posting stuff online, you're kind of making it everybody's business. So it's a catch-22. If you want to argue and debate, use facts and data. Don't use emotions and thoughts and opinions, because your opinion is different from my opinion. You're welcome to yours. I'm welcome to mine. We can agree to disagree and then move about our business. Don't need to freaking shove your thoughts or my thoughts down people's throats. Pepe Coin. Insider trading claims surface amid token theft. So a lot of people got into Pepe, especially as people were hyped about it, right? The coin really took off. But former Pepe Coin promoter turned crypto influencer Jeremy Pauly Cahin has levied insider trader allegations against the Pepe Coin team following the reported theft of around 16 trillion Pepe tokens. Pauly is now exposing team members' identities, divulging their wallet activities. On-chain analysis also points to significant Pepe Coin transactions involving insiders. In August 26, there was an update. Pauly disclosed that Pepe team possessed approximately 16 to almost 17 million in Pepe tokens distributed across 9 wallets. Surprisingly, the insiders refrained from selling the holdings. Instead, they strategically offloaded Pepe from a centralized exchange wallet, establishing a substantial short position. It's likely to be working with multiple branches of law enforcement to ensure, all right, so this is the person that calling people out. They're working with the law enforcement to ensure that Degen Harambe and the rest of his partners on the Pepe Coin ETH team get brought to justice as soon as possible. Their greed and crimes have caused undue harm to many. He's additionally revealed personal information about several individuals on the Pepe Coin team and detailed the transaction activities. According to Pauly, the Pepe Coin team is exploiting the community, and he asserts that their explanations regarding multi-sig wallets and Pepe holdings are entirely false. You can go dive down that rabbit hole, but it is the crypto world that we live in. When you get involved in the meme tokens, unfortunately, this is what's going to happen. Now, if we look at the all-time history, you know, if anybody that was an insider, because you got to think this chart starts on April 17th, 16th, but Pepe coin was started before that, I think, by a little bit. Don't quote me on that, but usually these charts don't have that initial genesis block or that initial genesis transaction. So, you know, you minted 10 million of Pepe coin, or maybe you know, 10 trillion of, how much is the overall supply? Yeah, look at that. Look at that circulating supply. Right? So let's say that you had billions of this token minted. It didn't cost you anything. You paid the ETH transaction fee, and that's it, right? Now it pumps off, and you get some insider information like, yo, we're gonna sell, guys. We're gonna sell. Yo, you ready? You ready? Go. And everybody sells at that high, dumping the price on everybody while people are still hyping into it, right? Or FUDing or FOMO into it, and now it's lower than it's been before. But I mean, it's still high compared to the people that initially got in. So I hope you took profits. But we'll see what the allegations, you know, what facts are behind the allegations. You know, chain analysis does back up some of the evidence that they're pointing to. So there isn't allegations. There's actual evidence and data to this insider trading claims. But it's just quite unfortunate. You know, projects like this, when you have leaders of that project or individuals of that project, unfortunately taking advantage of a situation and screwing the community, you know, you're gonna get bit. But at the same time, if you're in that community, that's the risk you take. That's the risk you take with these type of tokens and meme coins. So anyways, Dropbox ditches unlimited storage offering, blaming crypto cloud miners. Thank you. Sorry, I'm really sorry. Filecoin, Chia, maybe a little bit of not Flex, but, you know, various crypto programs or various crypto projects. You know, Dropbox left the door open, so we took advantage of it. Sorry. I know with Google you got to pay and stuff like that, but yeah, Dropbox said its unlimited advanced plan has instead moved to a metered storage plan, with new users getting 15 terabytes of storage, apparently enough to house 100 million documents. So that, I mean, that's perfectly fine for you know, a small person. But yeah, a growing number of customers were buying advanced subscriptions, not to run business or organizations, but instead to purpose to like crypto and Chia mining. Sorry. That's all I gotta say is sorry. Okay, I'm sorry. We caused it. I'm sorry. Good job, guys. Good job, Chias. The Chia ninjas. It was fun while lasting. Anyways, you guys don't need to see that. Talking to Comcast connectivity, we're at 1.7% drop frames throughout this entire stream. That's a lot better than what it was. But earlier today, it couldn't sustain above 4 megabits per second. They're saying the connection is good, but I mean, I got a top of the line Wi-Fi 6 router, the Asus AX88U, and I have a damn good Air Surfboard modem. I really think it's either the unit outside called the amplifier that amplifies the signal, because, you know, Comcast is still using broadband or cable connection, which is being pumped throughout neighbors, right? So if the whole neighborhood is sharing that connection, that can cause issues. It's not like direct fiber or anything like that, which AT&T has tried to poach me many times, but the issue didn't start happening to AT&T started laying fiber. So I'm not sure if they crossed lines or bumped something or what, but it's Comcast's issue to fix. They want to blame my equipment, or they want to point to my equipment. They're not blaming anything. The person that's been helping me has been really nice. But I really want to advise that it's not connectivity we're concerned about. It's the quality of connectivity. That quality connection. That's what drops your packets. Anyways, I'm excited for these. We got the Radeon, the AMD Radeon RX 7000 series. At the Gamescom product announcement, Scott Herkman, AMD's Senior Vice President and General Manager of Graphics Business Unit, sat down for a quick chat to talk about these products, right? So now we got the 7800 XT, the 7900 XT, and we already got the 7600, right? Now, here's what's exciting about this. Nvidia, and let's go take a real quick look. Let's go to newegg.com. And I think Nvidia latest 40 series offerings is kind of disappointing. Let's see here. Graphics card, GPU graphics card, 40 series. We're going to choose 4060 Ti, 4060. And I think the 4070 has it, but I think it's just these two. So let's compare real quick. The 4060 is 8 gigabytes. The 4060 Ti is 8 gigabytes. 4070, let's go and look at that. I think this is 12. Yep, 12 gigabytes. So the 4070 is 12 gigabytes. It's going to range 600 and plus, 600 or above, right? While the 4060 Ti is around 400 plus, right? And then the 4060 is around 300 plus, right? I am so stoked that AMD's mid-range GPUs at the minimum, and I know the 7600 should be in that category, but at the minimum has 12 gigabytes or more of VRAM. Because as we've talked about, and as many of the tech content creators have talked about, 12 gigabytes is becoming the new minimum for AAA titles these days. Period. End of discussion. The way games are going, the Unreal Engine and all that good stuff, and just the way these devs are just really breaking new barriers with how great these games look. The environment, the interactiveness, ray tracing, the lighting, it's just beautiful. And I'm so happy to come from where we were back in the day with Quake and old school Counter-Strike, 1.3, bunny hop and no scope your ass. We have come a long way. Graphics are just getting better and better. And I'm stoked to see that AMD, I would hope that they planned this. They had to be planned out ahead of time. There's no way that they saw that the upheaval of the community about the 4060, the 4060, the 4060 Ti only having 8 gigabytes of memory was inadequate, and the feedback they got from that. There's no way that AMD was like, oh, well, we better add more memory. I'm pretty sure it was already in the works, and the decision was already made, and 12 gigabytes for the 7700 XT and 16 gigabytes for the 7800 XT was a good move on their part. I just want to make sure that the pricing is good. Now, they say here yesterday, AMD unveiled its latest additions to the lineup with the two cards targeting the high-end market. I wouldn't call that high-end. I would call that mid-range. Because high-end now is like, if you ain't paying 800 plus for your GPU, you ain't high-end. It's like, wow, we're getting crazy now. It's like $1,000 cards. Get out of here. But yeah, so $499 for the 7800 XT and $449 for the 7800 XT or the 7700 XT, which we can. So that's going to take it. The 4060 and the 7600 are direct competitors, while the 4060 Ti, which is 400 plus. Some of these are like freaking 500 plus. So let's say 400 plus. So yeah, that will compete. The 4060 Ti and the 7700 XT will compete with each other. I would say get this card, even though you're paying a little bit more, depending on the model. I would say get that card because you get 12 gigabytes of VRAM. And then 500 for the 7800 XT. And we just saw that might be the competitor to the 4070. And yes, it has 12 gigabytes of memory, but the AMD one has 16 gigabytes. And look at these. These are 500 plus. So 660 somewhere in there. And they're going for 500. Bet, dude. Bet. AMD, good job. Like, I'm super excited for this. I am super excited. Let me know your thoughts in the comments down below or in the live chat. I'm very excited to see AMD do this. And look, they're not cheaping out on the memory bus. So 192, right? That's where the 6700 XT was. Is a 192-bit bus. And the 7800 XT was a 256-bit bus. Let's look at the 4070. Let's look at the bus for this real quick. Specs. 192-bit, right? So 192-bit for the one that's competing with the 7800 XT, but they're using 256. So I think AMD is going to do better here. I really do believe they're going to do better here. But we'll see. I'm excited. I'm excited to see it. I would love to test it. I don't think I'm going to buy a GPU off rip. I would try to get you day one coverage if possible, but you guys know I'm not as famous as the others. So we'll see. Maybe I might buy it. Maybe. I don't know. Speaking of GPUs, by the way, we do have a Gleam.io giveaway. I'm giving away a Asus ROG Strix RTX 3080. If you haven't entered the giveaway, go get your butts entered. And it's just a free GPU. All I need to do is replace the one fan, but I'm going to replace all 3 fans. I'm going to repaste it. I'm going to give you fresh thermal paste. I'm going to run it through the gamut of tests and stress tests to make sure that everything is good, thermal stuff like that. It's already good, even though it's down one fan. And with the older thermal pads and thermal paste, it's already good. So it's just a GPU. And I really like to just bridge that gap between gamers and miners, because I know that the GPU crisis has caused a lot of people to have a sour taste in their mouth. So gamers hate miners, but a lot of miners are gamers. And a lot of gamers are becoming miners. So we should all live cohesively together. I understand that back during the GPU crisis, you had farms, not me. Not a lot of people hating me, buying pallets of GPUs so they couldn't buy any. I understand why they were upset. So I really want to give back, and I hope that this goes to a gamer and somebody that might mine on the side who can put it to use. Maybe you got a fresh build, right? And you're missing that GPU. Maybe you're still rocking an old school, 1060, or maybe a 1660 Ti. Or maybe a freaking 970. I don't know. If this could be an upgrade for you, enter the giveaway. And I hope that you put it to good use. I really want to see this put to use and build that relationship back with the gamers. Because we're all one big family. We all enjoy the computer gaming tech that, yes, we can utilize for gaming, but also compute workloads. We're all one big family and we both enjoy the same things. But that is pretty much it for today's video. The 7800 XT and 7700 XT from Asus. Some of the traditional tough GPUs that we're used to. So this looks like a 2.5 slot card, maybe a 3 slot card. You can see how much further the heatsink extends beyond that I/O there. And then we got some other ones here. Other pictures. Here's the PCB. Not too bad. Not too bad whatsoever. Yeston coming out with a new design, the Sakara. Looking forward to it. 30 millimeters long, so long cards. Think about your spacing. And I'm excited for what AMD did. I'm happy that they came out with more memory than Nvidia's offerings. I'm happy that their memory bus is where it should be. And I hope that it puts Nvidia's, it forced Nvidia to cut prices, and we'll see how it goes. But wait for day one reviews of these GPUs. Don't go out and buy them off rip. Wait for day one reviews, whether it's for gaming related content or tech related content or mining related content. Wait for day one reviews. We'll get you the information as soon as possible. I haven't been able to participate as much because I'm broke, guys. I'm just a regular guy like you. I got the tickets that I got for today's game were provided by my job because I was lucky enough to win a raffle for my job to get tickets. Like I went to the recycling plant to recycle old parts and old computer case, and old laptop shells and PCBs because we all want to do our part to be environmentally conscious and stuff like that. We all want to do our parts. So always recycle, right? Old cell phones, whatever it is. And the cell phone that I had recycled was done, right? It was one of those bad phones that the battery would blow up on you. There's no reason, no way I'm going to recirculate that into the world. But yeah, I went recycled, didn't make much of anything. The steel rotors and brake pad, I recycled that. Just trying to make sure it's getting recycled safely, securely, being reused in a fashionable way, because we really need to. I'm not trying to be Greenpeace on you, right? I'm not trying to tie myself to a tractor that's building a mine or anything. I'm just being aware and understanding of the impacts we as humans are having on the planet, and I'm just trying to do my part. And if everybody did their part, it would be good. For the longest time, we had the upper echelon and big companies, big oil companies, telling us that we need to do better when it's really dumb. And they do need to do better, rather than me ride my bike everywhere or buy an EV vehicle just so that way I can feel better about myself. It's a number of different steps, recycling, stuff like that. And I think we could all be an active participant. But I think Red Panda Mining is coming on here in a little bit. If memory serves me, I could be completely wrong. I am not sure if Red Panda might not be going live. Okay, so then you just have Rabid Mining only at 1 p.m. Thank you. Wow. Thank you so much, Retro Mike, for the 5 memberships. Appreciate you guys. Appreciate the support. I don't see Red Panda going live. I guess they're not. Lately, they've been like, what? Coming on really, really late? So, yeah. Any last minute questions that you all might have? I'll be more than happy to talk about. By the way, crypto and hot rods is online right now. If you guys want to go hang out with them, I can't believe I just donated to a Jags fan. Yo, back up off of Duval, son. Back up off of Duval. All right. Look, I've been a Jags fan for a long time. Okay, RPM is traveling international. Okay, good. He's probably. Are they going to the event this weekend up north that I couldn't make? The crypto fam gathering. But yeah, if you got no last minute questions, go have yourself a wonderful day. Get out there, go do something, go work on your car, go mow the yard like I need to do. Have yourself a wonderful day. I will drink a brewski for you at the game. It is Miami Dolphins and Jaguars. Not well, it's a preseason game. I'm not gonna say it's not a real game because it is a real game because young men and young talent are fighting for that roster spot, and they're gonna give it their all. Some people aren't gonna make it. Some people are. It's a profession just like anything else, and you gotta respect it. It's a very hard profession. And I think that those players, not that I'm a sportscaster or anything, I think that those players, especially the running back, should get paid what their value is. However, I'm just going to leave you and focus on the crypto and tech news. Do me a favor on the way out. Hit the like button. Make sure to get subscribed. Hit the notification bell to stay up to date. As well as check out some of the links in the description. That'll support the channel and what we do here. And don't forget that there's a giveaway. And you can win yourself a GPU. It's in the live chat. Click the live chat. Alright? I'll see you guys around. Take care. Rabbit mining at 1 p.m. Go check him out. He's selling equipment. If you need Casper miners, go check him out. I'll see you later. Real quick. Son of Rabid Panda. It's dual 8 pins for these GPUs. The 7800 XT and the 77 and the 7800 are dual 8 pin power. And they are reported to be around 263 watts for the 7800 XT and 245 watts for the 7700 XT. So basically 250-ish. Right? Powered by dual 8 pins. Okay? Good luck to you. Get out of here with that Miami Dolphins for the... Get out. Get out. You know what? I like the Dolphins, though. Tyreek Hill. See, you guys are going to keep me on here. Bye.